This is the second quarter results. As our MD has said, the happy thing is that we have shown it is all up on the positive factors. Operating profit is up by 17.38%. Net profit for the quarter is up by 20.87%. The fee income, that is which constitutes the main component in the non-interest income, it is up by 27%. We were able to cut down the cost to income ratio by 328 bips. The gross NPA, which was 5.73 a year ago, is at 4.92, it is down by 81 bips. And the capital adequacy ratio, as per SEBI format, it is without adding the profit to arrive at the capital adequacy ratio. If that is taken into account, we have a tier 1 of 9.17 and overall it is 11.11. If the profit up to the half year is taken, it is 627 crores. If it is added, the tier 1 is 9.76 and overall it is 11.70. And in the Basel 3 scenario, CET1 is the prominent one, and the bank has done 9.40% CET1 as at the end of September. We are having 9.40 including the retained profit. Next slide. This is a bit more how the percentages come. You can look at it. Operating profit, which was last year corresponding period, it was 688 crores, has moved to 808 crores, and the percentage is as I told you earlier. The net profit last corresponding quarter was 311, it has moved to 375. The return on equity 14.57 has moved to 15.34. This is for the current quarter annualized. And for your information, State Bank of Hyderabad had the highest ROE and ROA as on 31st March also. I think among the public sector banks, we posted the highest ROE and ROA as on 31st March. ROA for the current quarter is 0.84, for 0.93, moved up from 0.84 last year. This is one of the highest in the industry. Cost to income, in the previous slide we said that we have reduced it to 328 bips. It is actually 44.50. Anything less than 45% cost to income is definitely an efficient one. Other income, it has shown a healthy growth from 224 crores, we have grown by 47% to 6.75%. Gross NPA, it is down by 81 bips. Net NPA, it is down from 2.87 to 2.39. And during the current quarter, we were also able to improve the provision coverage ratio from 58.57 to 62.31. And the next slide is the snapshot of how the previous performance highlights have been achieved. I will just go through the important ones only. As we told, other income, you can see this for our current quarter, it is 46.75% is the increase. Half yearly also it is impressive at 31.22%. The interest expenses has just gone up by 6.16%, and the net interest income, we have shown a growth of 6.78% half yearly. The staff expenses has come down from 831 crores last half year to 744 crores this year, mainly on account of we have made some excess provision towards the wage arrears, which after the implementation of the bipartite, whatever has been excess has been credited back to the P&L. That is why we can see that the staff expenses is negative at 10.45. Overheads has grown by 24%. That is in line with our branch expansion. We have opened about 127 branches last year, and the staff has been recruited. I think around 900 staff, 600 officers have joined in the corresponding period this year. All that has contributed to about 24% in the overheads. The operating profit for the current quarter is 17.38, but half yearly it is still more healthy at 20.84%. net profit is at 17 point, net profit is 16.56 for half year, and it is quarterly it is at 21% year on year. The total provisions has gone up slightly up from 377 crores to 433 crores. This 433 crores is because of the loan loss provision. It has gone up from 210 to 311 crores. The income tax, though it appears a bit high on that side, our tax planning is in place, and the overall current outflows on account of tax is managed well. This gives you an idea about our earning per share. The earning per share may not be of interest to the public because the entire share is held by State Bank of India, but you can see the benefit that is accruing to State Bank of India by having SBH as its associate bank. The earning per share is at 6,041 as compared to 5,183 last corresponding period last year. The book value is on an upward trend. If you look at it, 40,335 in March 14, in about 18 months, it has already 20% grown, 49,269 is our book value. The return on assets, I think we have discussed in the earlier slides, it is also on an upward trend, 0.70 in March 14, it has moved to 0.93 now, and ROE from 12.74, it has moved up to 15.34. This is a slide where you can see only the upward movement, ROA and ROE. The next is the movement in net interest margin. Anything above is always good, and 3.05, you should also factor that we have made 2 cuts in our base rate in the last 6 months. It was 10.20, has become 9.95. Still, the net interest margin has not reduced to that extent because we were able to cut down the cost by shedding our bulk deposits. Next slide is the retail deposits and the bulk deposits. You can see that the bulk deposit, which was 32,799 crores as on September 14, has been brought down to 29,655 crore. The more important is the high cost deposits have been brought down from around 20,000 crores to nearly 50% to 10,000 crores. And the entire story will be known only if I tell you this, that our retail deposit is above 1 lakh crores. The retail deposit alone is above 1 lakh crores as on date. And the retail deposit, in spite of shedding these retail deposits, you can shedding this bulk deposit, we have grown by 17%. From 1,19,688 crores, the bank has grown to 1,31,051 crores, which is roughly around 10%. But if the bulk deposit is taken into account, our retail deposit has grown healthy at 17%. The distribution of advances, we have taken a conscious decision to diversify the risk arising on account of credit. That is why you can see that we have consciously shifted from the large corporate advances to the retail segment. It was 60% about 2 years earlier. It was brought down to 48% as on 31st March 2015. Now in the last 6 months, we have further brought down the out of total advances, my large advances constitute only 45%, and you can see that SBH is one of the few banks where the personal advances has it has a share of 25% of the total advances. You can see that personal advances we have grown by 25.79. From 48% we reduced to in the C&I to 45%, and that 3% has gone to MSME and personal segment. The capital adequacy, as per Basel, you know that we should provide 9.625 at the end of 31st March 2016, and we are at 11.70% with retained profit, and you can look at it that CET is at 9.40. See, this 9.40 as compared to 11.70 only indicates that my own funds, the Tier 1 funds, it is at a very, very healthy level, and we haven't gone to, except 393 crores we raised last year. For the last 4 years, we haven't gone to the market to raise the Tier 2 bonds. the retained profit itself is taking care of the capital adequacy needs, but we may go to the bonds market if the rates are good enough. Asset quality, I think we have dealt it in the first slide. You can see that from 5.73 last year, it has come down to 4.92, and net NPA from 2.87 last year, it has come down to 2.39. But there is a slight increase if you compare the figures over March, and it is definitely down from the June level. The NPAs have gone up in June, but it has been well contained in September, and we hope to continue to go forward in that direction only. And you look at the PCR, from March 14 from 54.50, we have reached a level of 62.31 as at the end of September. And the next is that we are a commercial bank, we are there to make profit, and we are there to make a meaning to all stakeholders, but at the same time we are also responsible to the society. So that is why this financial inclusion, you can see that we have out of 1831 branches, 578 branches are rural branches, nearly about more than nearly 30% of our branches are rural branches. And unbanked villages covered, we have covered 3941 villages, most of them in Telangana, Andhra, Marathwada region and Gulbarga. And the BC channel transaction, because Mr. Modi has announced that every BC, their correspondent should earn a minimum of 5,000, and we should promote the employed people. You can see that from September 12, which was not there, we are now at 2,613.6 transactions are done through BC channel. And the last one, just to have a look at it, the Jan Dhan Yojana, our bank has got 10 awards, and we have opened about 27,64,000 accounts under Jan Dhan Yojana. The average balance under Jan Dhan Yojana is 694 rupees. It is slightly higher than the other all banks average. We are nearly 700 rupees is kept in the 27,64,000 accounts. You can imagine the balance that has accrued to the bank by opening these accounts. And I think I am stopping here. Any questions our MD will take, and it has been a good quarter for us, and we expect that we will continue to grow with the support from the customers, from the press and media and everyone. Thank you.